You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
The title of my article last week was "The Junior Gold Stock Fire Sale is Probably Coming to an End." And that sure looks to be the case here, as this money starts to rotate now, not only in the sector from the majors into the juniors, but from generalist investors that are going to start looking down the food chain into stocks that are undervalued in relation to majors that are becoming a little overvalued in relation to juniors.
Thanks for tuning in. I'm Bill Powers. This is Mining Stock Education, and joining me today is my friend David Erfle of JuniorMinerJunkie.com. Remember, Junkie has a Y on it. Link is in the show notes. Dave, thanks for coming back on for our monthly check-in. Let's talk gold price. The day we're recording, the gold is performing well. Where do you see the gold price going right now?
Always a pleasure, Bill. Thanks again for having me on. Yeah, it's I've been talking about this in my weekly column for the past few weeks about first the 1800 being this Maginot line of resistance that we had to get over, and once we did, it took a while. We had that range from 1750 to 1800 that we had to clear while everybody and his brother was talking about inflation, and which was frustrating gold bulls even more and more. But once we got over that 1800 level, then the 1850 level became the next line, and that line is important for two reasons. It coincides with the 200-day moving average, and also the top of that channel, that downtrending channel that began when gold hit that all-time high of 2089. Remember, the gold price doubled in about 4 years, from 1045 to 2089. And then the 382 Fibonacci retracement from that high was the 1690 area. And where did gold double bottom? It double bottomed at 1675. And in the meantime, it stayed in that channel. On the bottom channel was support, and the top channel was resistance. And it was basically a bullish falling wedge after a huge oversized gain in the gold price needed to consolidate. And the good and bad thing about these bullish falling wedges after a huge gain is, A, they're frustrating because they get up to the top of the channel. It gets people to start chasing stocks because they think it's going to break out, but it doesn't, because it needs more time, so it comes back down. But the good thing about that is, if you're a professional in the sector like I am, you understand what these moves have to take time to consolidate. And while they're taking this time to consolidate, that's your cue to basically go into the junior sector and look at these companies that had these huge moves that you may have missed. And they're doing the same thing. So you're waiting for the best time to come in and take your position. You know, you look at valuation, you look at the sector, you look at management. Did they do the right things? Did they raise money at the right time? When does the placement become free trading? All these things you have to factor in. And I've been doing that for the past 8-9 months. And last week, I pretty much put the rest of my cash to work because I expected this move to break out. I mean, if we take a look at the macro fundamentals, I mean, it's screaming that the gold was about to do this. And also, you had there's still a lot of skeptics out there. You know, but if we take a look at the miners, they had already broken out. The GDX had already broken out of this channel, right? And it's been led by majors and royalty companies. We take a look at the biggest major, which is Newmont Mining. Today, they're making an all-time high, over $72 a share. They've been raising their dividends. They've got over $5 billion in cash. You know, they're going to have to start looking at replacing those ounces. And they've already purchased GT Gold recently, all cash offer, no share dilution. You know, these majors, they've learned the lessons from the past, and they're doing the right things. They're taking strategic investments in these companies and then coming along and ponying up the cash for the rest of the position to take them out. And let's face it, $380 million for GT Gold, I think it was. That's pretty much lunch money to them when you got that much cash, right? So I know this is a long-winded answer to your question, but I had all these things that I wanted to say, and I'll let you go ahead and ask me more about what I just entered into the conversation.
So Newmont, because that is a leader and that's a major miner, like
That's
you said.
That's a sector bellwether. That's the number one gold company in the world, right?
And so what
that's what generalist investors look at.
And so what it's saying then, if it's hitting all-time highs, and I think it's like about 6% over its high from last August, it's saying though gold is $200 less per ounce, the fundamentals of this company look so good that we're going to buy it just because of the fundamental value. A generalist is saying that. Is that an accurate assessment?
Absolutely. And if you take a look at the dividend that it's paying, right, and the fact that it's paying a dividend that's way over the 10-year T-note, right, the yield on a 10-year T-bill. So not only do you get leverage to the gold price, but you're also getting a healthy dividend that protects you against inflation, right? So when you see the bellwether stock breaking out, and also today you see mainstream news headlines about gold stocks breaking out, the gold price breaking out. That's going to finally bring in these generalist investors. I've been telling my subscribers for the past few weeks that once the gold price makes a weekly close above 1850, it's going to bring in generalist investors. And because what's been happening up until that time is these juniors have been lagging, because this is what happens after these big, huge consolidations, right? General interest dries up. The people leave. They're like, why should I invest in gold stocks? General equities are making all-time highs. Bitcoin's going crazy. Whatever. Why should I invest in gold stocks? Well, now Bitcoin has come off its highs quite a bit. The stock market is starting to roll over. Selling may go away, and the gold price is really looking attractive here because these gold stocks didn't move up with these other commodity stocks, and especially the juniors. So I expect to see a weekly close above 1850 here this week. And once we do, the juniors are going to start to lead, and they've already started to lead this morning. I mean, I think the GDXJ is up almost twice as much as the GDX. So this is the time, although it was the time earlier to start getting into these things, but the title of my article last week was "The Junior Gold Stock Fire Sale is probably coming to an end," and that sure looks to be the case here as this money starts to rotate now, not only in the sector from the majors into the juniors, but from generalist investors that are going to start looking down the food chain into stocks that are undervalued in relation to majors that are becoming a little overvalued in relation to juniors.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com. We've talked about Newmont, and normally you and I don't chat about the majors. Neither of us invest in the majors. We like growth-oriented mid-tier producers is kind of the sweet spot where you get more leverage to the gold price and more potential share price appreciation. But when you look at Newmont and you compare it to Barrick, why is Newmont outperforming Barrick on a relative basis?
Well, I think it has a lot to do with their operations. I mean, they've had some operational problems in some jurisdictions, and I think Newmont's merger with Goldcorp made more sense than Barrick's merger with Randgold. I mean, I think that Barrick merged with Randgold just to get Mark Bristow. I mean, that's what it seems like. And but the Newmont Gold Corp made more sense. I think their projects are in better jurisdictions, and they have more cash. I mean, like I said, they have $5 billion on the books, and they keep raising their dividends. And I expect Barrick to do well as well, but I still expect to see Newmont and Franco-Nevada especially outperform Barrick.
Dave, I just had a friend of the family who does heating and cooling come over and charge my air conditioner for the season. And we were chatting, we were talking about what he's paying for his parts, many of which are copper in the heating and cooling industry. And he told me, Bill, this one part that I had to install on this job that I buy frequently, it was $70 last fall. And then he said, all of a sudden it jumped up to $120 like 6 weeks ago. And then he said, I went on vacation, okay? And I come back a week later, I went to the supply house, it was $140, this part. And so it's 100% increase in the price in this part in like 4 to 5 months. I bring that up to say, when you're looking at these gold projects and they say our NPV is such, at this gold price, yes, the gold price is a lot more than it was 18 months ago, but all these input costs are going up too, right? So how do you assess that when you're looking at developers in particular?
That's a great question. And by the way, you did tell your friend that this inflation is just transitory, right?
Right, I did. Yes, absolutely. But when you ask
all these prices are going to come back down.
Right.
I mean, yeah. Anyway, but yes, absolutely. Yeah, especially fuel costs, because, as far as miners are concerned, most of their costs are fuel costs, and the oil price is going up as well. So yeah, that's a great question. The gold price needs to get a little higher for some of these projects as well for that reason. And yes, that's another reason why you really need to focus on higher margin projects as opposed to the optionality plays that need a higher gold price. Of course, these optionality plays are going to get some love now that once these juniors start to break out, but you might want to look to sell them a little sooner once this up leg runs its course. I mean, the last up leg we had didn't even last 5 months, and the GDXJ went up 180%. If I'll give your audience a chance to pause the interview here right now and bring up a long-term chart of the GDXJ. Bring up a 13-year history of the GDXJ. It broke out above 45 during that 180% move. It corrected 33% in 8 months down to its July low. And I'm sorry, to its March low. And it retested that breakout level. Now, technically, it's a huge base. It's a 7-year base that it broke out of. Technically, the technical target for that breakout now is 90. And the GDXJ is trading about 52 right now. So basically what you want to do is you want to be holding these positions and, of course, be taking some profits on the way up. But that's the technical target you want to be looking at as maybe a time to say, hey, look, it's getting toward that area. The market's getting super frothy. I mean, remember how frothy it got back in July of August of last year. That's when you should be taking some profit off the table, not when you should be buying stocks, because a lot of people jumped in at that time, June, July, August, and they're gone probably most likely because they're down considerably on their stocks. So, I mean, that's just the way the market works, right? You buy low, sell high. Well, you got to know what the target is, the technical target on the GDXJ, and that's what it is. I'm not saying that it's going to go there, but technically that's where it's going. And if you take a look at the huge base that it's created and where the gold price should be going now after it's broken out of this consolidation based on the macro fundamentals, then that $90 target isn't so crazy.
Dave, when you issue a buy recommendation and you tell your subscribers what you're going to buy and give them a chance to buy with you on the same day, you don't front run, but you lay out why you're going to buy and if it's successful, like your price target. Okay. So when you invest in an explorer, it's of course, if they hit gold, the share price is going to go up. We all know that. When you invest in a developer, you often say, with this developer at the feasibility stage, I expect a potential buyout. It could be one of these 2 or 3 scenarios. Like when you invest for those reasons, a lot of times those developers can be laggards relative to a lot of other gold stocks you can invest in.
Absolutely.
How much time are you willing to give them? 18 months, 3 years? Because there's opportunity cost at play too here, right?
Right. Yeah. My basic rule is before I invest in any position in the junior sector, I have to see at least three times potential within the next 12 to 18 months. So I obviously continue to track the stock and follow the stock for my subscribers, as it's going along. And if it begins to get really overvalued in relation to the sector, I'll probably sell it and rotate the investment capital. Always bank the profit. I never reinvest my profits. I always bank the profits. And I'll reinvest the investment capital into something else. I mean, I did it earlier this year. I did it in Cisco mining. The stock had gone up to an over, I think, a 1.3 billion market cap, and I said to myself, you know what? I mean, this is the beginning of the year. I like to take some profit off the table at the beginning of the year. I'm going to rotate this into something else that I think has 3 times potential down the road, because I expect the sector to continue to correct here. And fortunately, I was correct, and I rotated the capital into something else. So that's what I'll do. But as far as the takeover is concerned, 9 times out of 10, I'm gonna sell it. If it's a cash offer, for sure, I'm gonna sell it if it looks like that this deal is going to go through, and then I'll bank the profit and I'll rotate the investment capital into something else. That has happened to me a couple times also recently. So you just got to keep being aware of the valuation of the stock. You got to be aware of political situations. I mean, look what's happened in Peru. I've had that hit a couple of my Peruvian silver developer and explorer. And fortunately for me, I had already taken profits off the table, and the rest was just basically house money until this Peruvian election takes place on June 6th. I mean, the leftist candidate is going down it looks like he's probably not going to elect, but the other candidate is not so hot either. They've had a lot of political strife there in Peru. They've had a couple different presidents. They've had like 7 or 8 different mining ministers. Trying to get something permitted there is really, really difficult. So and if you take a look at a lot of these Peruvian juniors, it's hit them. So you just always got to be aware of the political situation in the countries, in the companies that are operating in different countries. You got to be aware of absolutely of their cash position. When do you think they're going to raise? Talk to management. Looks like you're getting low on cash. Are you going to raise? You're going to have to include a warrant when you raise. I mean, you always have to keep on top of these things. And that's basically what my service does for you. I keep on top of all these companies for you and let you know what I'm going to be doing with my positions based on my research and these ongoing research in all these companies.
And you capped your service at 500 subscribers. So is there any room, or where are you at with that?
Yeah, there's about 50 to 75 available. I get cancellations and I get signups, and I think there's right around 50 to 75 space right now. So there's plenty of room.
Excellent. And Dave's website again is juniorminerjunkie.com. I've learned a lot over the last, I guess it's 5 years now since I've been following Dave. It's an excellent service for those of you that email me and say, Bill, who should I subscribe to? Dave is right there at the top. He has an excellent, very thorough, it takes a long time to read every Friday when he sends out the email. He doesn't just send you out a few paragraphs. It literally takes him hours upon hours to send out his weekly report. So it's well worth the money. Dave, always appreciate your insights. We'll be touching base with you in about 30 days.
Great to speak with you as always, Bill. Look forward to it.